Hey everyone, Meta Platforms reported a quarterly financial update after the markets closed on Wednesday, July 31st. In this video, I'll review those financial results from Meta Platforms. I'll highlight the big picture items that all Meta Platforms investors should know. And I'll also update my buy recommendation for Meta Platforms stock. Remember, I've had Meta Platforms stock rated as one of my favorite stocks to buy all year long in 2024. You're going to want to see if I'm changing that recommendation, if these results have anything in them that have me bringing Meta Platforms down off my list of top stocks to buy. So let's take a look at the details first.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Meta Platforms delivering revenue growth of 22% in the quarter, up from 32 billion in 2023, up to 39.1 billion in the 3 months that ended June 30th. That's phenomenal revenue growth from Meta Platforms in an industry that did not grow by 22%. So Meta Platforms gaining market share in the advertising industry, primarily from the shift in ad spending going from legacy methods like spending money on newspapers and billboards, switching over to digital advertising like spending on Instagram and Facebook. On top of that, Meta Platforms has successfully implemented its short-form video platform Reels to counter the success of TikTok and the increasing attention people are giving to these short-form videos. Meta Platforms' success has been excellent over the last few years. That increase in revenue resulted in a 58% increase in operating income, up to 14.8 billion, up from 9.4 billion in the same quarter the prior year. Meta Platforms now boasts an operating profit margin of 38%, which is remarkable if you consider Meta Platforms offers its services and products primarily for free. It has some products that you have to pay for, like its VR and its Ray-Ban glasses, but for the most part, joining any one of its apps are free, and still it generates operating profit margins close to 40%. And it's a lucrative business model because users create all of the content for Meta Platforms. Users are the one that are creating the opportunity for Meta Platforms to profit, right? You post a picture, you make a post, all of which increases engagement on Meta's apps and all of which is beneficial to its bottom line. I like this business model. Despite its massive size, the company still increased by 7% its family daily active people. The group of people that are using its apps on a daily basis increased to 3.27 billion. 3.27 billion people in the world use one of Meta Platforms' apps daily. That's a massive number and an convenience for marketers that want to reach a wide audience. This is unprecedented to have this kind of audience you can reach that logs into the apps daily. So this is a huge advantage for Meta. The network's effect from having this many people on the platform really gives it a strong competitive advantage that will be difficult for any social media company to take. The number of ad impressions delivered across the family of apps increased by 10% year over year. This is a signal of more user engagement. The more people are on the platform, the more opportunity for Meta to show advertisements. So if people are spending more time, there's more ads being shown. Also, if there's more people on the platform, there's more opportunity to show ads. So it's a combination of more people using Meta's apps, as you noticed with the 7% year over year increase, as well as existing users spending more time on Meta's app, likely a result of the success of the short form video platform. So it's all working well for Meta Platforms. And to put the cherry on top, the average price per ad increased by 10% as well. Typically, when you see an increase in supply, price decreases because there's more supply. Not in Meta's case. In Meta's case, organic demand for its products, which is showing advertisements to users, was so encouraging that the price actually increased by double digits as well. That was great news for Meta Platforms stock investors. And then more impressively, Meta was able to do this with fewer employees. So they had all of this extra business year over year, more revenue, more users, each user spending more time, and they were able to handle all of this with fewer people. The headcount decreased 1% year over year to 70,800. As you'll recall, Meta Platforms was one of the tech companies that initiated major cost-cutting initiatives in 2023 and late 2022 to counter the impact of slowing growth. And so that's now working in its benefit. As revenue has increased, its profits have increased by more. Looking ahead, the company is forecasting third quarter revenue of $38.5 billion to $41 billion. At the midpoint, this would be growth from the current quarter's report of $39 billion, which was a solid guidance. That means Meta expects this robust growth to continue throughout 2024. Now, more encouraging news came from its expense outlook, where the company said that its total expenses will remain between $96 billion to $99 billion, which was unchanged from their prior outlook. That's encouraging because the company reported 22% revenue growth, and so that might have facilitated an increase in hiring to keep up with the new customers and the new business, but that wasn't the case for Meta Platforms. Where they are spending more money is on capital expenditures. Previously, they said they were going to spend between 35 and 40 billion this year. They now raised that outlook to 37 to 40 billion. Also, they told investors that if you think this year is a lot of money, 40 billion on CapEx, next year it's going to be even more. And they're spending on artificial intelligence. That's their primary focus of investment. Artificial intelligence, Meta Platforms is already utilizing it for its recommender systems. If Meta Platforms can use AI to surface content that keeps users engaged for longer, that's a benefit to the business immediately, right now, today. And you're seeing that with the success of the business, right? You're seeing that with the increase in revenue. You're seeing it with the increase in the number of daily active users. And you're seeing it in the increase in ad impressions, which is a proxy for increased user engagement. So they are getting users to engage with the platform for longer and checking back more frequently. And so they're already seeing the benefit of their recommender systems that are infused with artificial intelligence. Now, Meta Platform stock is up 7% in the after hours following the earnings released. So investors liked what they saw from Meta Platforms, and I don't blame them. Meta Platforms is now trading at a forward price to earnings of 20, which I still don't think is expensive. I think given the prospects of this company and the performance it's delivering, at a forward PE of 20, I think is a good value for long-term investors. It's no surprise that I've had Meta Platforms rated as a top 25 stock all year long. I last updated that recommendation on July 1st, I should say. And given these results, I'm reiterating the recommendation. So I'm still keeping Meta Platform stock rated as a top 25 stock right now. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.